Welcome to the Keiser Report. I'm Max Keiser. Earlier this week, regulators in the U.S. and U.K. announced a record fine on the Hatton Garden thieves. Yes, the elderly thieves will have to return 10 million pounds of the 220 million they stole over the Easter holidays in London, and promise never to do this particular sort of crime again. Oh, wait, no, I'm wrong. Obviously, these sort of deals aren't on offer for Joe Pint of Lager. No, no, no. Of course not. It was J.P. Morgan, UBS, Citibank, Barclays, and the taxpayer-owned Royal Bank of Scotland that got such a ridiculous sweetheart deal. Yes, they'll pay a fine of $5.7 billion for rigging the $5 trillion per day forex markets of the, must have been like $500 billion at least they stole. But as the case will now not go to trial, we have no way of knowing how much money they actually stole.
Well, Max, you mentioned $500 billion, but the truth is we have no way of knowing. And this is the problem with all of these behind-the-door settlements that we see over and over for the LIBOR rigging, for the gold fix rigging, for the is-the-fix rigging. They constantly meet behind closed doors, the PERP and the Department of Justice. They decide what they'll pay. The public, who has been defrauded, has never any way of discovery, of knowing how much restitution they are actually owed. It could be actually $2 billion, and maybe the government's shaking them down, in which case we need to know about that. But it could be, $2 trillion. We don't know.
Well, we have a pretty good idea, because over the past 7 years, the UK economy has shrunk by any meaningful measure. And yet the Bank of England and the government has doubled their debt from 800 billion pounds to 1.5 trillion. So we can reasonably assume that the money that was stolen in the Forex market, in the LIBOR rigging scandal, the mis-selling scandal, etc., is a subset of that 800 billion. So even 10% of that would be 80 billion that they stole. And I think that's a fair guess in terms of how much they stole. They're paying in the fines a few million pounds. I think that in the billions and billions of pounds is getting closer to the amount that was stolen.
So whatever the amount is, let's look at what the mindset was of the people involved in these sort of scams. So we have a tweet from Reuters Jamie, and he's looking at the transcripts that were actually revealed about what these, how they were rigging the markets. And this is from a Barclays FX trader. He said, "If you ain't cheating, you ain't trying." And the Barclays guy said it in a chat room transcript from November 2010. So, here you have, clearly there was intent that they were defrauding the markets. But if you compare it to the Hatton Garden jewelry thieves, and they broke into a secure, safe deposit facility in London over the Easter holiday, in case you hadn't been aware of this, and they stole an estimated 220 million pounds worth of goods. Again, just like the Forex market, we don't know for sure how much they stole, because a lot of it was, people's cash. There was no record of what was actually in these safe deposit boxes. But they'll go on trial for blasting that huge hole in the cement wall to get into these safe deposit boxes, stole money from people. And it's no different what this guy from Barclays was doing when he says you ain't cheating, you ain't trying. He was blasting a hole into somebody's trade, and on paper, it might look less because it was like maybe a few pennies or a few pounds or a few dollars or a few euros he stole. But across trillions of trades, 5 trillion a day, that's a lot of money.
Well, there's two problems. I mean, you make a good point that this is not going to trial, so there will be no discovery, and we will not discover the exact amount of money that these banks stole. And they, of course, enjoy that privilege of not having to disclose the actual size of the crime. But the second problem is that banks tend to classify stealing as market making or providing liquidity. Mm-hmm. So to use this logic, using the Hatton jewelry heists, they should be allowed to walk free because they were, quote, making a market in jewelry. They were making a market in crime, in cash. So at the end of the analysis here, you end up with obviously a two-tier justice system. Not only do you not pay any meaningful penalties for stealing, but you get to define what the word stealing means. So now if this were applied to the rioters a couple of years ago who set fire to a building, they could say, well, we were making a market in flames, and the definition of arson is being changed to mean community building.
And in case you think it's actually a very onerous fine, this $5.7 billion between the 5 banks, and most people, the ordinary person out there, will say, you know, we've punished these bankers enough. Remember, the new conservative government, their first day in office, the headlines read, "Stop banker bashing." So everybody thinks like they've paid enough. Well, look at this tweet from City AM. Barclays and RBS share prices are rising on the back of the Forex fine.
Well, what's interesting in the U.S. is that they have a similar subsidization of the banking industry, but they also give away a lot of food stamps. So the people in America are participating in the funny money, funny printing. Matter of fact, J.P. Morgan prints up the food stamps. They also are a recipient of the subsidies from the government. But here in this country, in the UK, it's very interesting because the banks are getting subsidies to the tunes of hundreds of billions of free money. They're allowed to commit fraud with impunity. But in this country, unlike any other country, they're also imposing austerity on the poor. So that wealth and income gap is skyrocketing. And I posit this is not an economic policy, this is a social cleansing policy.
Yeah, well, also, of course, banks here, because they're paying so many fines, because they're only lending for property and the property bubble. We see this next headline because, you know, what's happening in the world is people are sick of banks. Satoshi Nakamoto, in his white paper on releasing Bitcoin, noted that the banker bailouts, in particular in the UK, we want our own alternative finance systems, our own alternative funding systems like crowdfunding. And look at this headline from Wall Street Journal: Europe has yet to produce a single internet company valued at more than $10 billion. Of course, there's no seed capital, as we've talked before, like in Silicon Valley, where there are, by the way, very high taxes in Silicon Valley if you're living there. You know, the U.S. has a lot higher taxes than what the U.K. does for these sort of billionaire class.
Right. Well, I created a startup called Start Coin and Start Join. And we're working with a crowdfunding platform, Bank to the Future. We talked about it on the show 3.5 weeks ago. We were launching a crowdfunding campaign, and we're already close to getting to our $1 million.
And why? Because you're going the crowdfunding platform way. And I'm going to turn to a headline about this crowdfunding in the Europe and in the United Kingdom, because of course there are no funds there. The banks, the Barclays, the RBS, they're paying so many fines for all their fraud in their banking system. And remember, many people say, you know, Bitcoin won't go mainstream unless you involve the banks, because then it's respectable, despite all the heresy.
That's heresy.
Yeah.
But your point, there's no money for startups because these banks are paying fines.
Yes, they're paying fines, and they don't want schmucks to compete with them. And we see that in this final headline here. Brewdog snubs the establishment with £25 million fundraising project. Independent craft beer makers' shares sale deliberately bypasses the city, which it blames for of beer. So it's a Scottish company, Brewdog, and they're a craft beer maker. Now, they had a previous crowdfunding, which they didn't use the likes of Crowdcube, which is the only the equity crowdfunding platform here that is endorsed by Boris and the Treasury, which, by the way, the Treasury now has Jim O'Neill, another Goldman Sachs guy. The Bank of England has Goldman Sachs former head, Mark Carney. But here they're saying the reason why they're going directly to the people, Brewdog, is James Watt, Brewdog's co-founder, said, quote, "We are not the Rockefellers, we are Guy Fawkes. This is about changing small business finance forever. By making profit king, the financial institutions of the city give rise to the and commoditization of beer. We are burning the established system down to the ground and forging a new future for business from the flames."
Right. Brewdog, essentially, they're a Scottish company. They essentially invented equity crowdfunding here in the world and also in the UK in 2009. Then 2 years later, other competitors came aboard with platforms. You mentioned Crowdcube. There are actually a few that have FCA stamp of approval, unlike Brewdog, which does not have the FCA stamp of approval. But what happens in this country is that you have the emergence of an entrenched oligopoly or duopoly. There's really two primary players in equity crowdfunding here, and the relationship with the FCA is highly suspect, I would say. They're using it as a barrier to entry as opposed to fostering entrepreneurialism. So once again, the UK government and the regulatory committees are involved in stifling innovation and not promoting innovation. BrewDog should not be harassed and written slam pieces about it. They should be celebrated as introducing and inventing a concept, not as the glide path to have some friend of a friend who's down there in Westminster, wink, wink, nod, nod, create a crony capitalist cartel.
Yeah, they were founded in 2007, and since then they now employ 360 people. And there are a lot of naysayers. I see a headline that says BrewDog deserves consumer backlash. So they've raised £5 million of the £25 million they're seeking, but in a platform called Equity for Punks. And there are people like Emanuela Vartomel, who CEO of All Street, a city firm that specializes in monitoring crowdfunding schemes, said it was difficult to see how investors will make a financial return on the deal.
To cast aspersions toward BrewDog is foolish. There's actually a listed company here in the UK with a much higher price-earnings ratio, et cetera. They were questioning the valuation of BrewDog. This is their fourth equity crowdfunding, which is they're going for $25 million at roughly a £280 million valuation.
£305 million, yeah.
There you go. So it looks high, but not if you think it's a high-growth company, which, of course, it looks to be a high-growth company. Here you have the mandarins down in Westminster and the FCA deciding they know best. The market knows nothing. No, you freaking idiots. The market knows best. You're there to just help the market move, not to be an obstacle stopping the market. You know, we went offshore. We did Bank to the Future. We've done Bitcoin Capital. We raised $1 million. But, you know, that's because the people want crypto. The people want crowdfunding. June 22nd, shareholder event in Hoxton for StartJoin. There's hundreds of shareholders now in StartJoin. You're all welcome to come to this shareholder event in London, in Hoxton, June 22nd. Gotta go.
And bye.
Stay tuned for the second half, a whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn back to John Aziz of AzizEconomics.com. John, welcome back to the Keiser
Max,
Report.
it's fantastic to be with you again.
Okay, so in the first half, we talked about Keynesianism, we talked about the shortcomings of this current government, and the question on the table was, can this government, this conservative majority government in the House of Commons, can they change their policies that would make more sense? And by more sense, I mean they would be able to generate some growth without also doubling the national debt.
Well, we're already on a growth path, although the growth did fall last quarter from 0.6 to 0.3%. So I think the key thing at this point is to not radically change things too much. It's to don't do the austerity they were elected to do.
But they're going to do austerity. Kay Osborne on July 8th, he's going to introduce £12 billion worth more of austerity cuts.
That's what the manifesto promised.
Okay.
But the other thing...
He's going to do that. You're saying don't do that.
I'm saying don't do that. The other thing...
He will do that.
The other thing that he mentioned is he was talking about productivity.
Yeah.
And the UK has had flatlining productivity since the first iPhone came out, which is, you know, a crazy thing. The idea that we haven't got more productive in all that time. And Osborne wants to do something about that. And
but to get productive, don't you need greater GDP per hour's worked, right?
The bank,
right? Isn't that what we can roughly say would be the working definition of productivity? You need more GDP or output per hour's work.
That's right.
Right? So, but in order to get that, you would need money circulating at a lot faster rate than it is now, and it's not because the main banks are hoarding that cash because this government won't address the fact that the four big banks are technically insolvent. They're hoarding all the cash to keep their zombie balance sheets alive. Wouldn't this economy be great if they let those four go bankrupt, nationalized the savings temporarily to protect people's money, and brought in real banks that were competing, like the Bank of Dave by Dave Fishwick, who's got a real bank down there, does real banking? Wouldn't that make sense?
That didn't, you know, that could have been done in 2008. I think they could have, you know, nationalized the savings and completely restructured the banking system. They didn't. Would it be beneficial to do it now? Arguably, yes. Arguably, it would destabilize things even more. I don't know. The key thing from my point of view is that we need to stop the austerity, and we need the recent Bank of England report shows that what we need to get the productivity up is investment. And that can be done in two ways.
But you need credit for investment, and the banks aren't lending. So where's it going to come from?
Well, it can be done through fiscal policy, through government spending on infrastructure and capex, or it can be done through cutting taxes, which is, I think, what Osborne may well do.
But adding more government spending is not going to increase productivity because the government is not the greatest entrepreneurial leading edge in an economy. To get the government to build stuff is not going to create the next Apple computer or the next, Facebook.
This is the point of Keynesianism. It will give the market the opportunity to do that.
Why not just let the market get on by itself without this interventionalist policies?
Because it's in a slump.
That's what capitalism's about. In Catholicism, if you sin, you go to hell. In capitalism, if you goof up, you go bankrupt. You can't just mollycoddle everybody in the economy and say, "Oh, you're a nice little Harry Potter character. You won't have to go bankrupt. Here's some money from the Bank of England." I mean, don't you actually have to have some winners and losers on the court? Instead of just making everybody on the street a winner or loser, like, "Oh, I got my job taken away because they shut the mines down. They put me on benefits. Now they want to scrape my benefits to give a bigger subsidy to some house price speculator and flipper." Right? I mean,
I think the key thing here is, yes, of course, in capitalism you have to have winners and losers, but the economy in the long run as a whole shouldn't be the loser. You shouldn't have this long depressionary slump. You have to give it a chance to get things going again and to get money circulating through it and to get businesses.
But I'm saying you've got four entrenched oligopolist potentates. The four big banks, Barclays, HSBC, Lloyds, and Royal Bank of Scotland, are gatekeepers. They're sitting there like trolls, not allowing capital to flow. But let's take a...
No, I agree with you about that. It's a major, serious problem. Maybe banking reform should also be on the table.
But they're the ones who own the regulators. The FCA, the Serious Fraud Office, they're staffed by people inside the banks. A BBC is run by an HSBC board member. We have to get regulations.
Another aspect of this is, aside from tax cuts, which I think would help, and infrastructure investment, which I think would help, would be getting the financial sector flowing so that capital can get to people who can do good stuff with it.
Yeah, there's
instead
a saying
of
on
being
Wall
hoarded
Street.
by the banks.
I worked on Wall Street for many years, where it's basically kill or be killed. And there's a famous saying, if wishes were knishes, we'd all be fat. In other words, I hear what you're saying. Like, it would be great if all this stuff were to happen, but wishes don't, at the end of the day, build an economy. You need real entrepreneurs unencumbered by monopolists and oligopolists and shady regulators like the FCA blocking what they need to do to build this economy. That's the main problem. Now, Keynesianism seems to me like all it's doing is it's getting more in the way. Academically and theoretically, it's great. It had its place after World War II. It got blown out by the oil crisis of the 70s. But I don't see what it's... because the people who are in policy-making decisions are not quoting chapter and verse from Keynes's work. They're just cherry-picking stuff to support their views.
The people who are making policy decisions are making a big mess of it, and if they go ahead with this austerity, there's going to be a recession. We could go into Japanese-style debt deflation, and it could be a big mess for the next 5, 10...
It's into deflation. They're going into deflation.
10, 20 years. Yeah, I predicted we would last year, and I'm very sad that my prediction is starting to come true.
All right, I want to kind of change gears a little bit here, because you are really a student of I would say, all schools of economics. And so you've come to Keynesianism because you've looked at all the different schools.
I would say that I feel like at this juncture, some Keynesian ideas, in order to generate the growth we need to get back to something much better than this, I would say Keynesianism is the best of a bunch of bad shots.
For context, let's just talk about a couple of different ones, just to give people some thought about it. Now, one school that you hear a lot about is the Austrian school.
Sure. Yeah.
Okay. So how would you give the potted version of what is the Austrian school, and what do you like or don't like about it?
The Austrian school is... I think I remember on your show, actually, Sandeep Jaitley gave a very good definition of it, which he said the Austrian school of economics is based on the subjective theory of value. And I wouldn't say that the Keynesianism isn't based on that, but yeah, the Austrian school is based on the subjective theory of value, and it's really the idea that markets happen because people with different subjective needs want to
Yeah, and they warned against things like malinvestment in that school, that what happens is that if people are impeded from trading and they're impeded from exercising their subjective view of value by government intervention, by saying this is worth that and this is worth this, you end up like you have in the UK, which is closer to the Soviet Union than you have in free market economics, where the government, under the auspices of the Bank of England, is giving a price to money. It's no different when Mark Carney says that the price of money is 1% or 1.5%. That's no different than a Soviet Union leader of Politburo saying, we're going to make 1 million cars and they're all going to be priced at 500 rubles a car. There's price fixing. It didn't work. It led to the collapse. And the same thing with Mark Carney. He's trying to fix the price of money. It's collapsing. You've got deflation, but they won't fire themselves. They're in there. There needs to be a price striker.
Deflation isn't the price of money collapsing. Deflation is the price of money going up.
We're talking about deflation is the collapse of these banks' balance sheets and the collapse of the velocity of money. As a result, the available money that's around, like the price of a Van Gogh or the price of a fine art or a flat in London or a flat in New York, is hitting all-time new highs. Asset prices are going up because the velocity of money is crashing, and what is around and it's being channeled into the pockets of the very few, who are then putting that not into the economy, but into the dead hand of assets like the $100 million for a Picasso. That doesn't help the economy one bit.
Yeah, I agree with what you're saying. You kind of have this biflation phenomenon of the highly priced art prices going up and the housing prices going crazy in the kind of oligarchical sector of the economy, and then that oligarch section is being fed by the current policies,
right? And they're also the ones who control the elections.
It's true. You're correct about all of this. And,
thank you. And that's been the Keiser Report. So, no, wait a minute. We have another 2.5 minutes.
But that doesn't mean to say that a little bit of Keynesianism now necessarily means malinvestment. Necessarily means, more enrichment for the oligarchs. What I'm saying is, cut taxes for everyone, invest in infrastructure and capital expenditure that is going to benefit the wider society. Maybe build some roads outside of London, build up the country's housing stock. I mean, we have a chronic shortage of housing in this country, a severe chronic shortage caused in part by bad planning laws that don't let people build enough housing, and in part by the Thatcher government selling off all the council housing stock. That's really what I'm saying. I want some economics of the people. The Tories can do it if they're willing to, do it.
Okay, so if you have two choices to describe the current lack of coherent policy in the UK and other G7 countries, you have two choices. The first choice is they are not applying the right mix of formula based on what could be, if you were to interpret Keynesian academic theory in a more enlightened way. Or B, the second choice is the reason this is not working is because the government, for some reason, is not applying the rule of law to the four biggest banks in the City of London in this country. Those are your two choices. You have to. Which one do you think is more determinant in figuring out why you have the biggest wealth and income gap in the history of this country? Deflation, even though the Bank of England's been pumping money like crazy and they say they want inflation, and you've got riots in the street and Scotland seceding. Of those two doors to go down, one is we need a better academic theory. Two, we need rule of law. Would you pick door number one or door number two? You have 30 seconds.
I think we need both.
Yeah, but you can't have both. That's not the question, John. You have one or the other. Is it one or two?
If we don't have two, number one would help, and if we don't have one, number two would help. I don't know which would necessarily help more. I know you think number two is.
I think you need rule of law.
Well,
you need if people finance terrorism, they should go to jail. Like HSBC, they should go to jail.
Obviously, we need big corporations to pay their taxes.
John, Aziz, thanks for being on the Keiser Report.
Thank you, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, John Aziz of AzizAnomics.com. If you'd like to get in touch, tweet us at Keiser Report next time. Bye, y'all.